Good morning, everybody. This is Patrick MontesDeOca with live trading talk for November 16, 2021. U.S. retail sales jumped by most since March, topping forecasts. U.S. retail sales rose in October for a third month as higher prices boosted merchant receipts and household demand remained resilient. The value of overall retail's purchases increased 1.7% last month, the most in 7 months, following an upwardly revised 0.8% advance in September, Commerce Department figures showed Tuesday. Excluding gas and motor vehicles, sales gained 1.4%. I find it very difficult to exclude food and energy prices due to the fact that we are approaching $85 to $90 a barrel in crude oil. And it's going to remain at high prices. The median estimate in a Bloomberg survey of economists called for a 1.4% advance in overall retail sales. The broad-based gain in spending highlights how elevated savings and rising wages have helped Americans sustain a robust pace in merchandise spending. Though total retail sales are well above the pre-pandemic levels, a recent inflation-driven collapse in consumer sentiment risks a future tempering in demand. U.S. prices are rising at the fastest pace in 30 years as businesses pass on growing labor and input costs to consumers. But it's hard to tell just how much that's impacting demand, since the figures aren't adjusted for inflation. Inflation-adjusted consumer spending data for October will be released next week. It appears that consumers are stepping up and paying higher prices, which is continuing, and it's going to continue to fuel this inflationary spiral that we are in for the time being due to the shortage of supplies. Demand seems to be rampant, very, very strong, breaking record levels, unprecedented, and we have a bottleneck in supplies. This is bringing in the discussion by Mr. Bullard, one of the board governors, indicating that interest rates could go higher in 2022. Now, if we take a look at the gold market, or if we take a look in particular the stock market is yawning on the news of inflation. It's not reacting to inflationary expectations. Continues to make new high. Continues to move up into overbought territory. As it expects, basically, that interest rates may not go up for some time. The stock market is not anticipating a rise in interest rates. Now, how does the rise in interest rates going to affect the gold market is what I'm interested in. And what we see here on this busy chart, this is a combination of various indicators that I use for my own purpose, which is a combination of Fibonacci Fend lines, Fibonacci retracement, the VCPMI indicators, as well as trend line channels. And what we see here in gold is a major channel that's been established from the high that we saw of about 1920 around May 28, to the low that we saw as of September 29, which is actually the low that the VCPMI was anticipating as the seasonal low, which came in very, very timely. And what we've seen here, it looks to be potentially the annual lows that were made at 1758. Seasonal lows look to be made around the low of 1726, 1721. The annual lows seem to be taking place around the 1758, 59 area. And what you see here on the right of the chart is the weekly numbers that we're using. And we're looking at a daily target being completed today at 1877. And above it is entering a high level of resistance that points all the way up to about 1886, 1888, which connects harmonically the daily with the weekly signals. And I've been anticipating or hoping that we are able to have enough buyers to take us up into that 1886 level. Or what we're seeing here is the potential reversion to the downside. And we have seen already a reversion occur from the sell one level. At about 5:15 a.m. it activated a short trigger for the day, and it's already completed the pattern of the mean, which is the target, which is the next level below on a short trigger. We are coming down in testing the 1858 level again, which is indicating that we could be looking at a buy trigger in gold as we speak. And we're going to be buying a gold at the market here. Buy a gold at the market. Buy a gold at the market. Discord traders, buy a gold at the market. We came down to that buy one level and reverted from there. And if we close above here, you can add to your long-term position as a day trade. We have support at 1851 harmonically, which will be another area where we want to add to the long side. Let's take a look at silver here. Silver is neutral. It's trading in an area of an equilibrium area between the daily and the weekly. When it's trading around the average price, it's pretty much on a neutral zone. And what it would do, trading above it or below it, is basically activate the price momentum, not necessarily a signal. Hold on to your long silver. Hold on to long derivatives in gold. The initial target is the mean, the daily mean, 1865. And if you have one contract, you can use the targets to increase your liquidity in terms of the targets activated. For example, the target that was activated from the daily buy one level is the mean above, which is 1865. So you can literally put a limit to sell 1865 MIT or better, if on a limit basis. So you have pretty much formatted your trade. It activated a buy trigger. This is the AI, what I'm sharing with you for you guys out there that are self-directed traders. This is the AI. These are the signals that are written in C++ that I'm sharing with you. I'm reverse engineering the trigger points. And this is how I use this indicator to trade myself, my own account, to coach and teach my traders in my live private trading room. If you're interested in joining us, please give us a notice. Let us know you're interested. Subscribe and like, and we'll be more than glad to share this incredible information with you. This artificial intelligence is produced by the Equity Management Academy. I target my day trades to capture on the first trade, if I can, around $300 is my target for day trade. And I try to book it as quickly as I can so that I can have some excess cash to risk on another trade. The trade here, the target is 65, and it will go neutral. And then we can wait to see what the market does at that point. The market will lead us into the next trigger point by activating these pivot points. The AI will tell us how to trade those pivot points based on the color. When you're in blue, it's buying area, it's accumulation of supply. The mean or the green is the mean or the average price. And that is a standard deviation, 50-50, which means that it can go either way. The red levels above are the extreme above the mean. sell one level is a 90% mathematical probability that if the market completes the target and reverts, this is the area where we can expect sellers to come into the market. As you can see here, 1879, about 5 a.m., we saw supply come into the market, activated a short trigger, and the target was completed. Not only the average price, but it came down below the average into a buy zone, completed the target, reverted right back up, and activated a buy trigger. The target of that trigger is 1865. We have an open order working to sell and lock in profits at 1865. Target completed. We booked $390 for this trade. We're back to neutral on the gold. Let's take a look at the silver market. Is in a neutral to bullish zone. There's no trades. Bitcoin is hovering around the daily and the weekly, buy 2 daily and buy 1 weekly. So we're expecting the probability that we're going to get a buy trigger here by trading through these numbers. And we've been looking to add to our position now in Bitcoin, as it appears that we have a beautiful bottom taking place. This is a perfect head and shoulder bottom. This is the left shoulder. This is the head right here with a low of 58,515. And we're making the right shoulder. Breaking out of the 61,477 is going to activate the daily and the weekly signals. Let's take a look at the weekly AI as we came into this week.
This is Equity Management Academy with the weekly Bitcoin report for November 12, 2021. Summary. The weekly trend momentum of 55,865 is bullish. The weekly trend momentum of 65,305 is bearish price momentum. A close above 65,305 stop negates this bullishness neutral. If short, take profit 61,255 to 58,335. If long, take profit 68,225 to 72,275. Trading instructions. Weekly trend momentum 55,865 bullish. The contract closed at 64,118. The market closing above the 9 WSMA 55,865 is confirmation that the trend is bullish. A close below the 9 WSMA would negate the weekly bullish short-term trend to neutral. Strategy. We are coming in this week with a bullish sentiment unless it closes above 55,865. Weekly price momentum, 65,305, bearish. With the market closing below the VC weekly price momentum indicator of 65,305, it confirms that the price momentum is bearish. A close above the VC weekly, it would negate the bearish signal to neutral. Strategy. We are coming in this week with a bearish price momentum unless it closes above 65,305. Weekly price indicator. Exit. Longs, sell 1, 68,225. Sell 2, 72,275. Exit. Shorts, buy 1, 61,255. Buy 2, 58,335. Cover short on corrections at the 61,255 to 58,335 levels, and go long on a weekly reversal stop. If long, use the 58,335 level as a stop close only, and good till cancelled order. Look to take some profits on longs, as we reach the 68,225 to 72,275 levels during the week. Strategy. If you are short, take profit 61,255 to 58,335 levels of resistance. Use close below 58,335 as protective stop.
We have completed the downside targets of 58,335 and the low is 58,515. That was pretty close enough. Now we are reverting. And then, by the way, if you give yourself a 10% margin of error, you're going to be able to execute it within the range. And the important thing is that you execute it within the range, because the price is just a guideline. It's like you're driving on the road and you have white lines and yellow lines and black lines. So as long as you can enter into the area what it's called accumulation of supply, then you can begin to build a position depending upon the multiples that you choose to trade. And when the market confirms and activates the trigger points, that's when you load up the truck, so to speak, and take your position. And depending upon your profile, obviously, you can choose the different instruments to apply. We're using this in the futures contract as a guide of a directional metrics for the market to give us a perspective view using a very specific structure. And we mean reversion trade within that structure. And that's pretty much my philosophy of trading and capturing profits, not as much as what the fundamentals are saying. Obviously, the fundamentals that we have are completely inverted to the actual price, to the actual market, particularly for precious metals. And I don't believe that we have seen yet an adjustment in the precious metals to what's going on with regards to the inflation level. And the real issue that we have here is the amount of stimulus really that is coming into the market, which is eroding the purchasing power of the US dollar. And that is where we are having this major anomaly in terms of prices. If we saw an increase in the money supply of 30%, as the M2 is indicating, well, the currency under that obviously is being devalued by that much. So the more that they print, the weaker the US dollar becomes in terms of its purchasing power. it's exacerbating the basically inflation level in terms of price inflation. So we have currency, monetary inflation, and we have price inflation simultaneously. And what the market is indicating here, obviously, is that this potentially is going to be short-lived. This is what the stock market is saying as it continues to move higher, regardless of any negative news that come into the economy. And I don't believe that interest rates can go up. It is a very dangerous policy as we approach $30 trillion in debt to have interest rates move up. Now, the general sentiment here for most gold bulls, or I would say conventional wisdom, is that as interest rates go up, the price of gold is going to come down. And I believe that we're looking at the opposite happening here if we go back to 2018, when it was the first time basically that interest rates were raised, the price of gold exploded. And so I believe that we're looking at a possibility that if interest rates do go up, it could be a pretty much a runaway market for the gold market, as it needs to adjust to the values. Just like everything else is doing, even people, consumers are adjusting to higher prices, and they are willing to pay higher prices. So the gold market and the silver market will adjust. It's just a matter of time. And when it does, if you are not in it, I guarantee you're going to miss it. So it requires a lot of patience, particularly for this past 12 months. It's been a devastating market, inverted to the actual fundamentals, and it has come down. But it's not in a bear market. This is a correction in a bigger bull market. And we have just completed the second major leg, and we are starting basically the beginning of the third leg. What you see here is the completion of the second wave and the beginning of the third wave. And if you can see this, you're looking at a tremendous what looks to be a double bottom, a major double bottom in here. And we are approaching resistance levels and Fibonacci completions. The market will tell us if it has enough muscle of buying to take out this supply here between 1888 and 1909, which are the targets for the rest of this week. Continue to hold your derivative long positions in gold. Look to buy corrections in digital assets, corrections in precious metals, gold and silver, as I believe we are entering the possibility that the annual lows could be in place. Thank you, everybody, once again for the opportunity to share this with you. And I do believe and hope sincerely that you are taking advantage of this situation. Be well. Take care. I'll talk to you next time.